Palantir might be about to shock the entire market, and most investors still have no idea what's coming. While everyone's focused on the usual suspects in AI, Palantir is quietly positioning itself as the most important company at the intersection of artificial intelligence, defense, and national security, and the next few weeks could change everything. We are talking about a stock trading at one of the highest forward price-to-earnings ratios in the market right now, but with powerful tailwinds behind it. From rising geopolitical tensions to an aggressive new wave of government contracts, the timing couldn't be more critical. So if you're holding Palantir, thinking about buying or trying to figure out whether it's overhyped or undervalued, this is the video you can't afford to miss. Hit subscribe now so you never get blindsided by what Wall Street won't tell you until it's too late. Let's address the most critical distinction right away. Palantir is not your typical AI play. It doesn't sell flashy consumer tech or chase trends. Instead, it builds the tools used behind closed doors by defense agencies, military contractors, and allied governments around the world. And as global conflicts escalate, demand for these kinds of platforms is surging. Right now, Palantir is embedded in defense systems that most people will never hear about until years after deployment. Project Maven, NATO's multi-domain sensor system, and other AI-based battlefield platforms are already operational and expanding. These systems aren't theoretical anymore. They are active, and Palantir's role in powering and maintaining them is growing quarter by quarter. What's driving this urgency is the shift in military strategy worldwide. From Eastern Europe to the South China Sea, AI is becoming the next arms race, and governments are spending aggressively. The United States just proposed the largest defense tech budget in its history, and Palantir is right at the center of it. That's not speculation, that's fact. But here's the catch. The stock is now trading at around 203 times forward earnings, and some metrics even suggest it could be closer to 240. That is an incredibly high valuation, and even the most bullish analysts are being forced to ask whether the growth ahead can justify it. If Palantir disappoints even slightly in its next earnings report, we could see a sharp correction. But if it delivers, we might be witnessing the early stages of one of the most profitable AI runs in the entire market. Now here's what you need to watch very closely. First, the second quarter 2025 earnings report, which is projected to be released between August 4th and 7th. This will be a critical moment. We're going to see how Palantir is converting its government partnerships into revenue, how it's managing costs, and most importantly, whether its commercial AI platform is finally starting to scale beyond defense. Second, geopolitical developments. If tensions rise further or new defense contracts are awarded, especially from NATO or Five Eyes countries, expect investor sentiment around Palantir to spike. This isn't just about US spending. Allied governments are now aggressively rolling out AI defense systems, and Palantir is already a preferred partner. Third, analyst revisions. Over the past few months, price targets have started to diverge. Some analysts have Palantir pegged around 107, calling it overbought. Others are doubling down, citing potential upside toward 150 or even beyond, depending on the strength of upcoming earnings and new deals. Any surprise upgrades or downgrades in the next few weeks could move the stock fast. Before we go further, let me give you a quick reason why this mid-year period might be the most important stretch for Palantir investors all year. There's growing momentum in AI-powered ETFs and momentum-based funds. These funds are increasing their weight in Palantir, and it's not by accident. They are betting that Palantir will lead the charge in the next tech rally. But here's where things get really interesting. Despite the sky-high price-to-earnings ratio, Palantir actually scores extremely well on what's called the Rule of 40. This is a metric used to evaluate high-growth companies by adding revenue growth to profit margin. Palantir's combined score is well above 50, which means it's technically delivering more efficiency than even some FAANG stocks during their early scaling years. And that's the paradox. It's incredibly expensive by traditional metrics, but it's also outperforming many other high-growth names when you look at how efficiently it turns revenue into margin. That's why big money is still holding strong even at these levels. And here's something else to consider. Palantir's ability to execute with this level of efficiency during a time of global instability isn't just rare, it's strategic. In markets like this, companies that can balance growth with resilience become the anchors for institutional portfolios. That's exactly the role Palantir is starting to play. Now think about what happens if Palantir announces just one more major defense contract before earnings. If we see a new deployment in the Middle East or another NATO upgrade, that alone could push the stock through resistance and trigger another round of momentum buying. And at that point, we're no longer talking about speculation, we're talking about acceleration. Just a quick shout out to our sponsor Moomoo Financial. If you're looking to start investing or expand your portfolio, Moomoo has an incredible offer just for you. When you open a brokerage account using the link in the description and deposit as little as $1, you'll get a chance to draw a free stock, and that stock could be worth up to $2,000. But that's just the beginning. If you make a net deposit of $100 or more, Moomoo will reward you with 5 free stocks, each potentially valued at up to $2,000. That's a huge opportunity to kickstart your investing journey with minimal effort. And if you're ready to go all in, depositing $1,000 or more unlocks an even bigger reward, 15 free stocks. That means you could be looking at a total value of up to $30,000 in free stocks just by getting started. This is one of the best deals out there for new investors, and it's a great way to explore the stock market with zero commission trading, advanced tools, and a user-friendly platform. So, don't miss out. Click the link in the description, sign up, and grab those free stocks while this offer lasts. Now, let's jump right back into the video. Still, it's not all upside. The risk is very real. If Palantir misses guidance, or if earnings don't show significant acceleration, the downside could be sharp. Remember, when a stock is priced for perfection, it can get punished fast when reality falls short. And that's why this moment matters. If you're in this stock or thinking about jumping in, you need to understand both sides. Don't get blinded by hype, but don't underestimate how critical this moment is either. The takeaway here is simple. Palantir is in the spotlight. Government demand is increasing. AI defense systems are no longer theoretical, and institutional capital is watching very closely. The next 4 to 6 weeks could reshape how Wall Street values this company. So, is Palantir overvalued, or is it still early? That's the question every serious investor is asking right now. Let me know what you think in the comments. Are you bullish on Palantir's defense strategy and AI dominance, or are you sitting this one out until after the August earnings call? And if you found this breakdown useful, make sure you subscribe so you don't miss what happens when those numbers drop, because this could be one of the most important earnings events in the entire AI space this year.